Good morning everyone, and welcome. Today, we're going to dive into a critical and complex area, navigating legal and financial challenges, specifically focusing on bankruptcy, divorce, and tax fraud. We'll explore how these issues often intersect, the consequences they carry, and most importantly, strategies to prevent and effectively manage them. This presentation aims to provide you with a clear understanding to help you handle these situations with confidence and foresight. Let's get started. Bankruptcy, divorce, and tax fraud each involve their own unique legal and financial challenges, but they often overlap in ways that can complicate matters further. It's important to understand how these areas connect because that knowledge is key to making informed legal and financial decisions. Each comes with its own set of complex procedures and potential consequences, which can have a big impact on an individual's or a business's financial health. By being aware of these issues and their interactions, we can better navigate the difficulties, reduce risks, and stay compliant with the law. Bankruptcy often happens when someone faces overwhelming financial difficulties, such as medical bills they can't pay, losing their job, or accumulating too much credit card debt. When filing for bankruptcy, the person submits a petition to the bankruptcy court. This process can lead to either eliminating their debts or reorganizing them to make repayment more manageable. There are different types of bankruptcy, like Chapter 7, Chapter 11, and Chapter 13, and the outcome depends on which type is filed. While bankruptcy can provide significant relief, it's important to understand it also comes with serious consequences, such as damaging your credit score, the possible liquidation of assets, and restrictions that can affect your financial life for years to come. Divorce often brings significant financial challenges, starting with how shared assets are divided and who becomes responsible for existing debts. It's common for disputes to arise, especially around property distribution, alimony, and child support, which can complicate the process further. The financial decisions made at this stage don't just impact the immediate situation, they can affect both parties' credit scores, income streams, and long-term financial stability. Because of this, it's crucial to have a thorough understanding of the local laws that govern these matters. Equally important is engaging in careful negotiation to ensure that financial interests are protected throughout the divorce proceedings. This approach helps minimize risks and lays the groundwork for a more secure financial future for both individuals. Tax fraud involves illegal actions like underreporting income, claiming deductions that aren't legitimate, or hiding assets to reduce tax obligations. This kind of misconduct can impact both individuals and businesses alike, creating serious challenges. The consequences of tax fraud are severe, ranging from hefty fines to potential imprisonment. Some common examples you might recognize include falsifying expense reports or failing to declare income held offshore. That's why detecting and addressing tax fraud is so critical. It helps ensure we stay compliant with the law and protect the integrity of our financial systems. Tax fraud can arise in both bankruptcy and divorce cases, which often leads to complicated legal challenges. One common fraudulent action is hiding income or assets during these proceedings, whether it's a divorce or a bankruptcy filing. This kind of behavior not only makes financial disclosures more difficult but also tends to prolong the legal process and raises the likelihood of criminal charges. Because tax fraud overlaps across different legal situations, it adds another layer of complexity to resolving these issues effectively. It's crucial to recognize these overlapping challenges as this awareness helps manage legal risks while dealing with financial hardships. When it comes to preventing problems like bankruptcy, divorce, and tax fraud, one of the most important steps is to seek professional legal advice. Experts can guide you through complex situations and help you make informed decisions. Another key factor is maintaining transparent and accurate financial records. Keeping everything clear and organized not only helps you stay on top of your finances but also protects you from potential legal troubles. Careful financial planning is equally crucial. It allows you to anticipate and manage risks before they become serious issues. Compliance with tax laws is non-negotiable. Being honest and thorough in your reporting drastically reduces the chances of facing fraud allegations. Finally, consulting experts early on is a smart move. Whether you're dealing with financial or legal challenges, early advice from the right professionals can make all the difference in navigating the complexities smoothly. Let's recap the main points we've covered. First, bankruptcy can offer much-needed debt relief, but it's important to remember that it also has a significant impact on your credit. Next, divorce not only affects how assets are divided but can also influence your overall financial stability going forward. Then, tax fraud carries serious legal consequences, so it's crucial to handle tax matters with care and honesty. Finally, if you're facing any of these challenges, there are resources available to help. Consulting with legal professionals, government tax authorities, and financial advisors can provide guidance. Reliable sources include the U.S. Bankruptcy Court websites, IRS publications, and family law support organizations, all of which offer valuable information and support.